Welcome back. I'm Pratap here. Today is 23rd April 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Today we got one trade, that is Dixon, and TVS Motor. We did actually prices are entered into the zones, but we didn't take, because we know the zones will be violated. Actually, both the zones should be violated, but only one zone is violated, second one is not violated. That has given a very good return. But we can't take the trade because it is already a tested zone. And also in TVS Motor, you will be having a very good learning, because I remember last week or before to that week, one of our members asked whether do we need to consider proximal type 1 or proximal type 2 for accepting the order flow. I already gave an explanation, but if any of you missed that explanation, don't miss this video. This is another good example for TVS Motors. And one more quick announcement. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos I provided in a playlist, Supply Demand Zone Price Action course. I have provided the link to that playlist in this YouTube video description. So please go to that. Please go to the video description of this video and access that link, and then access all the training videos. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new video, you will get an update in that channel. Okay, now let's continue with our analysis with starting with the Dixon. So Dixon is a 75 minutes high liquidity zone. We have a rally, 2 base candles and a drop candle. And this 75 minutes zone should be fine-tuned with 15 minutes and then again with 5 minutes. So that's why let me show you how I fine-tuned with 15 minutes time frame. So this is the 15 minutes time frame. So here we have a drop candle, 1, 2, 3, 4, 5 base candles. But this leg candle also included as part of the base, because medium size. Next you have a drop candle. This is the 15 minute zone. Now we need to fine tune this with 5 minutes time frame. In the 5 minutes time frame, you can see 2 zones. One is a rally, 3 base candles and a drop candle. We have a base candle. These 2 medium size leg candles are also part of the base. If you feel risk, the zone is very high risk, you can take a deep entry like this. This is the actual base candle, right? This is the way you can plan. Or you can plan further, you want to reduce. This is the way you can plan. You should not say this is not a valid leg out. Yes, it is not a valid leg out, part of the base only. But here you might be having the actual order flow here. Maybe there could be some other order flows also might be there here at lower time frames, that is 1 minute time frame. If they are very strong, again they will not let the price reach up to here. If that is the case, why we have to draw like this, you may ask. Risk management. If you can't handle this much risk, the only choice left out for you is like this, or even like this. If really prices enter, then only you will take a trade. Otherwise you will miss this stock. In case if it gives any opportunity coming here and coming down, you will miss the opportunity. This is the point you have to understand, how we are managing the risk. Sometimes we may miss the entry. If the risk is not within your limit, you have to accept that. Okay, here you have a drop, base, a drop. This is a very small risk. Like this you can draw. Okay. Because risk is very, very small, strictly implement entry buffer. Because sometimes what happens, prices may not reach up to the zone, and because the order flow is very strong. That happened today. And this is the type 2 entry buffer. Just how much we suggested in our training videos, 0.1% you can use, maximum 0.1% you can use. So exactly 0.1, this is the value I have given, that is 7892.10. See, today prices entered into that area. We got an entry. This is 7892.10. Prices went up to high of this candle 7892.95 paisa. So definitely you would have got a trade. Your trade would have been executed here. And after that prices came down. So what is your target? 15 minutes target. This is supposed to be your target. You have a rally, base, rally. This is the 15 minutes target. But unfortunately, prices did not reach up to this 15 minutes target in the initial stage. Later on it came, that is a different story. Generally what you do, you use a trailing stop loss to protect your profits. Generally we use 1 minute trailing stop loss or 5 minutes trailing stop loss. Look into this 1 minute trailing stop loss. Earlier how these supply zones holded the price. See here, drop, base, drop. This is our first trailing stop loss. Prices came down after that. Again they created a base, drop down. Again rally, base, drop. See, it tested this area and again came down. And again you have a rally, base, drop with the hidden body. See, again this area is tested and came down. And finally this is the one. You have a drop, base, again a drop with hidden body. And this is the one failed. Probably you may use some stop buffer a little earlier and you might have exited. This is the area you should exit. Exactly here or a little above. Because sometimes what happens, within this buffer area, prices reach and again they come down. This is your trailing stop. You would have exited, but after that, see what happened to the prices. Excuse me. Prices again moved. They didn't again give the second entry, again turned back and finally reached the target. If anybody is holding, that is your lucky trade. But we can't, every time it won't work like this, right? We have to follow some fundamental principles. Those who holded the prices today until it reaches here, you would have got a very good profit. Probably you would have got double the profit than what you got here when you exit. You would have got around 7% ROI you would have got. But we got only half the percent of the ROI because of the trailing stop, because we never know. See here, today what happened? Prices came. Sometimes prices will go up and exit. The market, you can't predict. If you are very sure that market will come here, we will be a god. We can't predict that much accurate level. So when your trailing stop loss says you have to exit, there is no other choice. Even if you would have followed 5 minutes trailing stop loss, also still you would have exited. We don't have any 5 minute zones here, supply zones. And this is the first 5 minute supply zone. You have a rally, 1, 2, 3, 4, 5, 6 base candles and a drop. See here, this is the one exited here, a little above the 1 minute. So even if you would have followed 5 minutes, still you would have exited. And you may think, okay, without trailing I would have got a very part, but still you would not have got. Let me show you. See here what happened. A new 15 minute zone is created, rally, 3 base candles and a rally. Next time prices came, you would have exited here. Still, you would have got very less profit here after reaching. See the rejection? After that, the supply further pushed and all these levels are broken. That is a different story. So that's why some fundamental principles we need to follow always in the trading. Otherwise, why we will be having a separate session in lesson 19 about trailing stop loss? We discussed all the important strategies related to trailing stop loss in our lesson 19. If you did not listen trailing stop loss, please listen the session. It's a very important session. Many times it saves, it protects our profits. But today's situation is a different story. It is a completely luck-based scenario if anybody is holding up to here. Maybe you would have got around 7% intraday ROA. That is a different story. But that is a purely luck-based. But we won't trade based on the luck. We based on our principles. Supply demand zone, price action and technical analysis, fundamental principles. We can't deviate from them. Maybe today you got the profit. Maybe other days you would have got several losses if you are trading like this. It is a blind trade if you don't exit here. So 1 minute is many times it has given a very good success, trailing stop loss during intradays. If you are getting more in profits, later on 1 minute to 5 minutes you can shift. That is the strategy I explained, such kind of strategy. I remember Reliance example I have explained. From one lower time to higher time frame, how we shifted and protected our trades. Some extent you can use 1 minute trailing. After that you can shift to, after reaching a minimum RR or expected RR, then you can further shift to 5 minutes, take more risk, and if you are getting any more profits, you can grab it. But that didn't happen today. Today we have to exit here. So if you would have exited here, you would have got a profit 5,910 rupees. This is the maximum. Not beyond that you can't get. Which is 3.5% ROI. As per one future's margin cost. So this is about the Dixon. Next one you will be having a learning. That is TVS Motors. Because prices entered here. Previously somebody asked me, I didn't remember the name, asked me whether we have to use type 1 or type 2 proximals. I gave an explanation. Same explanation I will repeat. Now this is a good example to make you understand that concept. First let us look into this zone. So this is a rally to base candles and a drop candle. So rally base drop. This is the high liquidity zone. And this one we fine tuned with 15 minutes. When you fine tune with 15 minutes, see here you have a rally, two base candles and again a drop candle. You may say this is again a drop, base, drop, but this is actually picked up the orders from here. So you have to consider as part of this zone. Because here we have the actual order flow which picked up and further proceeded. But again, here again you see you have a drop, base, drop. This is the way you can consider, or you can also consider rally, base, drop. This is also valid. But I have considered this is a rally, base candles and a drop candle. This is the 15-minute zone. We have two 15-minute zone. This is one 15-minute zone. This is another 15-minute zone. Now we need to draw the 5-minute zones. Here observe carefully. It's very important. Please observe how I fine tuned. You will understand. So this is a drop base drop. Prices entered, already tested this zone, so we can't plan our trade. And see here also you have a drop candle, you have base candles, 1, 2, 3, 4 base candles, and again a drop candle. See, this is also tested. But if you would have drawn type 2 proximal, see the test slightly it missed. You might be thinking, okay, there is a rejection, not tested, order flow is good, I can take a trade. That way we may feel, right? Here also you can do the same. This is here I drawn type 2, here I drawn type 1. Why? This is the question you have to ask me. Why you didn't draw type 1 like this? Actually here I have drawn type 1 like this. But here instead of drawing up to the type 1, I have drawn up to type 2. But here instead of drawing up to this type 2 proximal, I have drawn type 1 proximal. Why there is a difference? Why there is a partiality here? Or why sometimes it may looks like adjustment. Why we are doing some adjustment here? Previously I gave an answer. I don't know how many of you really remember. It's an important concept. When you really take a type 1 proximal order and type 2 proximal, remember, if the gap between type 1 and type 2 is almost negligible, it is almost negligible or very minute, the consideration need not be given. In such kind of situation, go for directly type 1. Because sometimes the orders will be within this small gap area. Institutions may not spread the order flow. That you will understand once you get into even further lower time frame, 1 minute level and all, if you go, you will get better clarity. Let me show you that. Generally, I'm not encouraging you to do analysis up to 1 minute, because 1 minute level analysis not accurate always. But some special scenarios, they work very well. See here, you have a drop. These two are base. This is the way your zone will be there. 1 minute zone. We have a drop, base and drop. See, already earlier it just picked up from here. But this time it went a little deep. So that means already orders are consumed. We don't know how strong further it will be. So because of such kind of reasons, what I suggested you people earlier, when the gap is very small from type 1 to type 2, the order flow you can't expect much difference. So that is the reason why I recommended you to draw type 2 proximal itself, type 1 proximal itself, because there is no significant difference here. It's negligible. But here you see, the difference is not negligible, considerable. The difference is considerable here. There is a good gap is there. You have a considerable wick is there. So type 2 you can prefer. Two advantages you get. One advantage is your risk will be minimized and you get more reward. And moreover, this is already tested. Even type 2 is also tested, means it should be very careful. Better not to take a trade in this zone, because it is already tested. And type 1 and type 2, there is no difference. Already type 1 is tested and it is very negligible. And expecting another trade with this negligible difference, expecting a trade is dangerous. So this is the reason why when the gap between type 1 and type 2 proximal is minimal or even negligible, either cases, it is a minimal. You are not convinced. See, There is no measurement criteria. How much value depth should be there? Don't ask me such kind of questions, rules and all. You should convince yourself. You have to convince. Okay, this depth is not really considerable. Already type 1 is tested. Can I take a trade in type 2 means maybe I am not really convincing. Depth is not enough. If you get such kind of feel, don't take trade in that zone, type 2 level. Sometimes you might be tempted, there is a good rejection, there is a strong order flow. See, even this year also, there is a good rejection is there. But see, after that, it holded the prices. The continuation should be there. These are all some doubts. Rejection is some extent. After that, there is a move. There is a move because the price action institutional. See here, a drop, base, drop. A zone is created and pushed. Rejection is not continued here. These kind of price action observations you should make. I know it is too early for you people to understand all these things. That's why I'm just giving you a simple technique earlier. What is that? If the gap is between type 1 and type 2 proximal, gap is very small, you draw up to type 1 proximal. If it is tested, don't take the trade. If there is a considerable gap and if there is a rejection is there, then again prefer type 2 also. Nothing wrong in taking a trade if the risk is within your acceptable limit. That is very important. So anyway, this is tested already. So it is a risky to take a trade. Even this is tested and taking a trade here also risky. So according to us, mostly this zone should be violated. This zone should be violated. But see what happened today. Today prices entered. First one is violated. See the first one. The one that is tested here is violated. Because it is tested, we didn't plan a trade. This is also tested, we didn't plan a trade. But see today what happened? It went and came down. ERC candle, a new zone is created and then pushed the prices down. That way you should understand. That way even it reached nearly it came. This is actually target, came very close. But this is the last minute, last 1 hour trade. You should look for only 5 minutes targets only. If it is 5 minutes target, maybe somewhere here, you would have exited in this candle, in this area. But anyway, you can't take this trade. Please remember. I'm just telling you the statistics. If anybody taken, what would have happened? But this is against our principle, taking the second trade. When you have to take, if this is a high liquidity area, you can take. But there is no confirmation for us. See, software may tell you, even if it is a fresh zone, it is a high liquidity zone, it can tell. But without a software, how can we identify this is high liquidity? Only after several tests only we can assume this could be a high liquidity. That too with 80% guarantee, not 100%. Multiple tests also may not be high liquidity always. But at least some extent we can assume. By seeing some zones are keep on creating within this area and again pushing. If all such kind of activities, at least it will add more justification for our conclusion. But anyway, we didn't have enough data to consider this is high liquidity and you can't plan a trade. So this is not a valid trade for us. Please remember. Might have given a good return, but not a valid trade. So both these zones are tested. But the question is why this is not violated. It has to be violated. It is already tested. There is no rule that tested zone should be violated always. Sometimes they may not be violated. Maybe one reason could be institutions might have added a new order flow in this area. That could be the reason. Or institutions might have created a new zone here. See, this is actually new zone they created. This is a ERC candle, leg-in. You have 1, 2, 3 base candles. And again a drop candle. A zone is created. Exactly within this area. Who knows, it could be a high liquidity zone, but we may confirm only in the future, not immediately now. But we will remember this price action. Okay, whatever it is, TVS Motor, we didn't take any trade because according to our rules, this zone has to be violated. That's why we didn't plan any trade in TVS Motors. Except these two, none of the stocks prices reached. But let us look into the, let me show you, because a lot of stocks, lot of fine tuning, some stocks, a huge order flows are there. Some zones are a little complicated to do proper fine tuning. Some complexities are there in couple of stocks I have seen. I spend a lot of time in fine tuning the zones. So first one is Coromandel. Coromandel is a daily high liquidity zone. Coromandel even identified aggressive trade also. Let me show you how I fine tune. But anyway, price did not reach. Because sometimes I may forget. That's why for aggressive trade, we should be more careful. Sometimes aggressive trades may fail also, that possibility is also there. So when prices are reaching properly, should plan the trades. So this daily zone has to be fine-tuned with 75 minutes time frame. Here in the 75 minutes time frame, we have a drop base rally is there. Drop base rally. And before that, prices already came very deep, and here we don't have any 75 minute zone. So that means I have drawn these zones by bypassing 75 minutes. That's why I named it as aggressive trade setup. See, fine tuning means none of the zones should be bypassed. Inside daily, you should have a 75. Inside 75, you should have a 50 minutes. Inside means overlap with 75 minutes on daily. Don't think that inside means exactly inside. It can overlap. I'm just using this English word because this is a common English word and everybody can easily understand. Okay, inside again 75 you should look for 15. Inside 15 you should look for 5 minutes. This is called fine tuning the zone. Then what is aggressive trade setup? Anyway, you will be learning in the next training lesson. Aggressive trade setup. While fine tuning, sometimes you may bypass. You skip 15 minutes, directly you draw 5 minutes inside 75. You have a daily high liquidity zone. Sometimes you may skip 75 minutes and directly you draw the 15 minutes. Or sometimes you may skip 15 minutes and directly draw the 5 minutes. Sometimes you may skip both 75 minutes and 15 minutes, directly you draw 5 minutes. Where inside the daily high liquidity zone. So we are not doing fine tuning. We just taking the deviation from fine tuning the zone. And if you draw zones and if you plan a trade, that is called aggressive trade. Many times if you are drawing zones like that, they will fail. There are higher chances that zones will be violated. You can say maybe up to 60% chances to violation of the zones. Even 60 to 70%. Sometimes even I can say even 80% zones will be violated. Such kind of zones. But few zones will work. And those few zones, how do you know that they will work? Using price action clues. You already learned price action clue in the previous session. Anyway, I'll explain this concept in detail in our next training lesson. That is lesson 21.5. I think last session is 21.4, right? Okay. So anyway, this is an example for the aggressive trade setup, but I'll explain. First, let us look into this. We have a 75 minute zone, drop base rally. This again fine tuned with 15 minutes time frame. See here. You have a rally, base rally. This is a 15 minute zone. Inside 15 again fine tuned with 5 minutes. Let me show you in 5 minutes time frame. We have a drop, base, rally. So this is the area we identified the real order flow. And here you want to take a trade. But anyway, today prices didn't come. And one more thing, there is a strong order flow indication. See the rejection from this zone. After that, there is a continuation. See again another candle move, how sharply it moved up. So exactly just below, there is a strong order flow. That means in this 75 minutes area onwards, there could be a strong order flow. That is another reason for justification why we should not miss this trade. But today prices didn't come. Okay, then what is that we did here? So let me go to the 15 minutes time frame. See here, without 75 minute zone, directly I have drawn 15 minute zone. We have a drop, 2 base candles and a rally candle. This is the 15 minutes area. And why I am calling this is an aggressive trade? Because of this strong rejection. This is my price action clue. What it is saying? In this area there is a strong order flow. Let us keep an eye. This is the first price action clue. And this is the second price action clue. Even little closer it came compared to the earlier. And again there is a huge move from here. And this is the third time there is an entry into this. Came very close to this fine-tuned 5-minute zone. This is the fine-tuned. Maybe with your entry buffer, you would have got a trade in this stock. When on 27th February. So definitely somebody would have taken a trade here with this entry buffer. Next time when prices enter into this 5 minutes, fine-tuned 5 minutes, definitely you can plan a trade. But what happened? Within this area, in 5 minutes level, again further, we have already LOTL zone is created, drop, base, rally. Already we have 15 minutes, LOTL is created. So because of that, one more fresh 5-minute zone is created inside this 15 minutes time frame. So let me show you 5 minutes. See here, we have a drop, base, rally. And here also again a newly created 5-minute zone. I consider this as a ERC candle, base, rally. So this is the way again another 5-minute zone is created. So first you plan your trade. In case this is violated, immediately you take another trade, next trade here. That way you can plan. Our risk is manageable, you can combine both, that is also you can plan. And see another price action clue. Prices came close to this, again moved up. They are not something from here, prices are not easily reaching to this area. Just before itself they are moving out. That means a lot of price action took place here, price action clues as provided to us. Because of all these reasons, there is nothing wrong in planning this aggressive trade. When you have to plan, if this is violated, then aggressive. When order flows are there, when risk is within your accepted limit, there is nothing wrong in planning aggressive trades if your price action clues are very strong. Here the price action clue is rejection. Aggressive trade, well, not only rejections, there are other price action clues also there that we will discuss in our next lesson. See, in every example, you will not cover all the scenarios. In this example, one scenario. But in our training session, we have to discuss all the scenarios. So this is about Coromandel. We didn't get a trade, but we have a very good learning from the stock. And next one is Gujarat Gas. This is also a daily demand zone. See here we have a rally, base rally. This is a high liquidity zone. And this is fine tuned with 75 minutes. So this is the entire candle is you can consider as a leg-in ERC. Then 1, 2, 3, 4 base candles and a rally candle. This is the way you have drawn 75-minute zone. Within this 75-minute zone, again you have to draw 15-minute zone. This is again a real, this ERC candle is a leg-in. You have a base and a rally candle. So this entire, this is 5 minutes. This is the one. This is the 15-minute zone. We have a drop, base, rally. Now inside you identify the 5-minute zone. So we have a rally candle, base candle. This medium size is part of the base. There is again another tiny candle. Everything is part of the base, and we have a rally candle. You know, it some kind of discomfort about all these candle structures. But okay, we have a order flow here. If you want to minimize, what you can do, go to the 1 minute time frame, and you can adjust and draw the 1 minute zones inside this. That possibility is there. I have already drawn. This is the 1 minute zone. Because both the colors are same, you are not clearly visible. But now you can see this. This is the 1 minute zone I have drawn. Let me delete this 5 minute zone, you will get clarity. This is the 1 minute zone. Because I am not comfortable with this entire risk, so draw on the 1 minute zone. Okay, I am not going to 1 minute. You go to 1 minute in this chart and do this exercise. See, every time you have to, whatever I am fine tuning, you have to repeat them on your charts also. Otherwise, how do you get the knowledge? Just listening the video, and if you think you are getting the knowledge, that won't do. You have to do exercises. Repeat whatever I am doing, you repeat. First you see. And without looking into this chart, first complete see, for example, this chart, how to fine tune, I explained. Now pause the video. Now don't look into these steps, earlier steps. Now you repeat. If you have any doubt, again go back and refer where you are making mistake. Like that every day if you practice, after few days you will be exactly drawing the way how I am drawing the zones. See, once you get the knowledge, there is nothing great in drawing these, fine-tuning the zones. Some of our members are already started doing this. They are also doing in the trading activities also. People are getting the money for the last 3 weeks I have been seeing. Maybe few days they won't get the money. Okay, the next one is HDFC Bank. This is 75 or daily? First let me open daily. Yeah, this is also a daily zone. Rally base, rally with hidden body. This is HDFC Bank. And today we didn't get a trade, but how I fine-tuned. This is what you have to learn, right? So inside 75 minute zone, drop, base, rally with the hidden body. This is the 75 minute zone. Inside 75 we have 15 minute zone. This is a rally, 2 base candles, and again a rally with hidden body. This is the 15 minute zone. And again inside 15 minutes we fine tune to 5 minute zone. So this is the 5 minutes time frame. We have a drop, 1, 2, 3, 4, 5 base candles, and again a rally candle with a huge hidden body, with a gap also. But see, this zone already tested twice. This is the first time prices entered and moved up, gave a very good push. See the second time. This time prices went more deep inside till the distal line of this zone. Why second time worked? Already it is a tested zone, you may ask. Sometimes it will work. Maybe there could be strong order flow. That's why it is working. It need not be high liquidity zone. Prices went deep. See, earlier it occupied. Maybe below also there is a strong order flow. Now this time it went very deep, close to the distal line, and gave a push. It gave even more profit. But generally we don't take second trade. Definitely we would have missed this trade on that day. Anyway, today we didn't plan any trade because we know that this zone will be violated. Or if institutions wants to convert this zone as a high liquidity zone, what they do, inside this area they will add a new order flow, or maybe let us assume today prices entered here, maybe they might have created a new zone and pushed the prices up. That way we will get confirmation maybe this is a high liquidity zone. Next time we can plan our trade. Definitely not today. The reason is prices went deep inside. We can't take risk by assuming it is a high liquidity. According to us, this should be violated. But this is what the points you need to consider from this HDFC fine-tuning the zone. And the next one is Fin Nifty. Fin Nifty is also a daily zone, supply zone. We have a rally candle, 1, 2, 3, 4 base candles, and then with a hidden body drop candle. But lot of order flows are there inside in Fin Nifty. Because supply is very strong, even before entering into the zone itself, prices were down in Fin Nifty. If I am not wrong, today is expiry for Fin Nifty, right? Okay, now let us look into the 75 minutes, how I fine-tune. This is a rally candle, had the hidden body. It is a rally, 1, 2, 3, 4 base candles. Again I had the hidden body. This is a drop candle. This is a hidden zone. Actually, it is not looking like a zone. See, here you are adding the hidden body. Here also you are adding the hidden body. So this concept we discussed in lesson 9. I think lesson 9.4 we discussed about such kind of zones in our training lessons. So this is a 75-minute zone. Again, this is a drop candle, 1, 2, 3, 4 drop. That way you can consider drop base drop. So we have two 75-minute zones here. And these zones, we need to fine tune with 15 minutes. You have a rally base drop. And again here you have drop base candles and a drop candle. 1, 2, 3, 4, 5 base candles and a drop. You might be wondering why I have drawn these zones. These are the 5-minute zones. But where is the 15-minute zone? Without 15-minute zones I have drawn. Why I have drawn? Let me show you. First we will complete this fine-tuned area. Within this 15 minutes, we have a rally base drop. This is the fine-tuned 5-minute zone here. Again here, two fine-tuned 5-minute zone, rally base drop. This is one order flow. This is a drop base, a drop, another order flow. Even I am wondering why I fine-tuned these zones without bypassing. Am I sleeping while drawing these zones? Rally to base candles, it's a good zone, but where is the fine-tuned 15-minute zone? Did I miss anything? So definitely, without a zone, 15-minute zone I have drawn, no reasons. Maybe I might have forgot and directly drawn the 55-minute zones. To be honest, I didn't remember the reason why I drawn these zones without fine-tuning with 15 minutes time frame. Price action clues also not there properly. I don't know why I drawn, I'm wondering really. Okay guys, but anyway, there is no fine-tuning. If you are planning, this is an aggressive trade, but without price action clues, there should not be, you should not plan aggressive trades. We have good order flows are there, but such kind of order flows will be violated easily. See, prices coming close and rejecting and going, okay, then we can consider, but it's a continuation, just rally base drop, again drop base drop. All such kind of zones will be violated easily. Maybe they work during intraday sometimes. If trend and other your supply demand zone, core concepts, whatever you land till lesson 20, if all the concepts are satisfied, definitely these zones, one of these zones will work. That is a trend-based trading. That is our bullish or bearish trade setup. At the time prices reaches, if there is any bearish trade setup, it may work. Otherwise, they will be violated easily. But I didn't remember why I drawn these zones. Maybe I thought this is the 15-minute zone and I would have drawn this. Sorry for my mistake. I was wondering where is 15-minute zone. There is no convincing 15-minute zone here. All these candles are moreover, see the price action. All 1, 2, 3, 4, 5, 6, 7, 8, all these candles, definitely this area should be violated. But anyway, ignore, this is the one we should not plan. Here we have the order flow. Maybe in a sleepy mood I would have drawn these zones. Just ignored. Maybe I thought this could be 15 minutes area and I have directly drawn. But actually this is 75 minutes area. Inside 75 minutes we don't have a 15-minute structure. When you don't have a 15-minute structure, there are higher chances this zone will be violated. When this zone won't violate, if institutions decide to create a new 15-minute zone and again push the prices, next retracement, we get a trade opportunity. You know, you are aware of all these concepts. Anyway, this is the only area we have order flow. Anyway, today prices didn't reach. Morning session came very close and came down just before reaching. You may think, okay, if you keep some entry buffer, maybe we would have got a trade here. You may think like that, but no. This is actually, this entire move is because of 1 minute. See the first 1 minute. Maybe first few seconds itself prices would have came here. That's why maybe this is a fake trade in the morning session. Just maybe one lot or something is executed. Sometimes because exchange, some flaw is there. People always used to say there is a flaw in the algorithm. Some people keep market order, not limit orders. Market order means whatever the price, we are telling the computer to take your decision, whatever price. Some people would have placed an order here. When you say whatever the order you take, computer what it will do, randomly it will pick up from here and execute the order, and immediately it will come down in the next second itself. But for us in the data, a huge candle will be displayed. And why it happens only in the morning 9:15 session? Because that at the time so many order flows will be there. Because software in fraction of a second it has to take a decision. At the time randomly when software picks up an order, it might have found a order here, and somebody is saying that okay, take a market order. Market order means whatever the price, with that price you execute. That way it will match, immediately it will execute the order. The next second again it will come here. So that is the reason why morning 9:15 candle, many people will avoid trades because of this reason. Sometimes what happens, steadily prices will go, it will move a little up, you will see a wick. You will see a wick there. If there is a wick means market moved further. It may not be a fake trade. After that selling pressure, after few seconds, market will be coming down. Not all of a sudden, maybe in few seconds time period it will come down. But here sometimes you will see in just split of second, it will execute, and next split of second it will come here. So that's why even if you would have keep a entry buffer, I don't think this is a valid trade. So now let's look into the next stock, Alem. Alem, I think I didn't fine tune the zone. Let me check. Yeah. See, this is a ERC candle. Again, you have 3 base candles and a drop. This is a daily zone. I didn't fine tune this zone. See, 75 minutes, I didn't find any proper structure. I am not convinced with any of these structures. Think where is the proper supply here? You may say rally, base, drop, but see prices pierced in this candle. You may say, can we consider this is a leg in, base, leg out? Not really convincing here, this one. Sometimes go to 15 minutes, you see any price action close will be available, aggressive trade. That way also, not really seeing, see the structure, very bad structures here. You may say rally, base, drop. Can we consider like this, you may say. I didn't feel comfortable with this leg candle. Still I am considering medium size only. Maybe a little, maybe this could be a bigger candle in the medium size candles. Because of all these reasons, I am not comfortable with. If there is a big move down, a lot of price action took place here before going down. Maybe in that kind of situation, maybe I would have considered, but definitely not in this situation. My experience is better leave this stock. If it works, okay, that is a different story. At least we should have some confidence about the zone we are drawing. Without confidence, if you just like that, if you draw and expecting trades, it won't. First, you should build some trust with that zone. Such kind of trust I am not able to gain from this zone. So what to do? Leave it. We have so many other stocks, right? That way you have to think. So next one is BPCL. This is also daily supply zone. We have order flows here, BPCL. We have a drop, 2 base candles and a drop candle. This is a daily zone. Inside I am fine tuning with 75 minutes time frame. 75 minutes we have a rally candle, 1, 2, 3, 4, 5 base candles and a drop candle. There is one more, in the recent action here. This is a leg in, a 1, 2, 3, 4 base candle and a drop candle. But this drop candle may not be very big. Okay, sometimes compromise and you draw. Why? To check any order flow is there inside. That could be one reason. So with that, look into the 15 minutes time frame. Here we have a good drop base drop. This is the 15-minute zone. And what about here? Here also we have rally, 3 base candles and a drop candle. This is the 15-minute zone. Okay, now our concentration is on 5 minutes. Now let us observe carefully these 5-minute zones. See, we have a rally, base, drop, excellent zone. No doubt in that. Very good order flow. That's why, see, prices reached, went inside, and see, it would have given a very good profit. More than 1:5 you would have gained by the time prices reached here. So we can't plan a trade in this zone. Next one. This is the next one. So inside the 15 minutes you have a rally, 2 base candles, and this is also included part and drop down. That is one way you can consider, or you can consider this is a ERC candle, this is a base candle, medium size is part of the base, and drop. That way also you can consider. If anybody says this is having a very long wick, still you can consider this as a leg in, as a ERC. Either way, it doesn't make difference. But here we have some order flow is available. But see the rejections from the zone, prices are going up and coming down, going up and coming down. And before that, prices again, maybe, I don't know, this is a high liquidity area, I am not really sure. But there is or if you go to 1 minute time frame and if you fine tune, probably you may get clarity. But anyway, this is a tested zone. BPCL is a tested zone. So planning a trade is risky unless you confirm this is a high liquidity. But see here again, it tested. That's why earlier I told you, maybe this could be a high liquidity zone. This is a tested, this is again tested. Now this time tested, but this time you observe, prices went deep inside. Now expecting a trade in this zone is very risky. There are no signs of new zones creation within this area. So planning a trade in today, definitely it is a risky. Better to leave, confirm again if it is a high liquidity, if any new zone is created within this area, and push the prices. Next time you can plan a trade. But also remember, high liquidity zones also will fail one day, because they also will be having expiry period, but we never know when will be the expiry. We never know how many times the zone will be tested. Some zones they test some 2 times or 3 times or 4 times. Some zones even 15, 16 times also they tested, we have seen. The only thing is, if you feel like you take a trade and you want to try that time when you are watching this stock and prices are entering into that zone, if the risk is within your limit and if you feel the risk is small, even if it is violated, I can accept the risk. If you have such kind of feeling, at the time you can take risk and you can trade. Because high liquidity supports, if your luck is there on that day, definitely one more trade it will work. But the problem is with high liquidity zones, without this software, by the time you watch, already it has given you several tests. That's why we should be very careful with proper price action clues. You have to take trades, multiple trades if you want to take. Anyway, this is already this is not executed today. Next one is ICICI Bank. ICICI Bank is also 70 daily high liquidity supply zone. You have a rally, 2 base candles and a drop candle, fine tuned with 75 minutes, identify 2 order flows. This is a leg in, 2 base candles and a drop candle. You can also add some hidden body here. And next one is again you have a rally, 2 base candles and a drop candle. This is the way 2 75-minute zones are identified. Now within that 15-minute zones, so this is our leg in, 2 base candles and a drop candle. This is 15-minute zone. And again here you have a rally candle, base candle and a drop candle. This is the way we have drawn the 15-minute zone. Now fine tune with 5 minutes time frame. So you have a rally candle, base candle and drop candle. This is your 5 minutes order flow. So this is a good zone. You can plan a trade in this zone. But here, see the structure. This is a ERC candle. This is again another drop candle. In between there is no base candle. Because this is a very big candle, you can't keep it part of the base. If it is medium size like candle, yes. But this is beyond the size is bigger than the medium size. So that's why I am not comfortable with this. I know that this zone will be violated. You may ask a question, if that is the case, we can say rally, 3 base candles drop. Why can't we draw a zone? But here, see here, the zone is violated with this candle. That's why you can't consider this zone. If anybody feel rally, 3 base candles and drop, you can't consider this because it is already violated. But anyway, prices came close to this zone, came down, means maybe in this area order flow could be strong. But anyway, ICICI did not enter into this zone. We did not get a trade. Dixon already we discussed. TVS Motor we discussed, and the last one is the Tata Communication. In Tata Communication, I think the structure is not good. This is 75-minute zone. We have a drop, 3 base candles and a drop with hidden body. You get a very big body. So drop based drop, this is the high liquidity. I went to the 15 minutes time frame. In 15 minutes time frame, you have a rally base drop is there. But see, this is the worst price structure. Some kind of sluggish nature here. Definitely this zone will be violated. But if you look into 5 minutes, you get better clarity. See the structure here also you see. This is a medium size candle, okay, part of the base. But see, this is a large candle. Structure is again not good at all. Rally, base, rally and again drop. So somehow not comfortable with this structure. So no, this zone will be violated. And apart from that, this structure is the worst structure. This price structure within this zone. So anyway, we can't plan a trade in Tata Consumer, and anyway prices also did not enter into this zone today. So this is how I fine-tuned the zones. And one trade we got Dixon, but remember, if anybody did not use entry buffer, you might have missed the trades. Those who took strictly that entry buffer from type 2 proximal level, definitely your trade would have been executed today. Hope this information will be useful to you. Let us take a break here and we'll continue from here in our next video. Thank you.